Welcome to Forex Pro Chart's weekly analysis for the week beginning January the 16th, 2011. This week we are going to be looking at the Euro USD. We start by looking at the monthly chart, and we can see that the Euro is basically in a downtrend. This is either the beginning of an uptrend with a retracement, or was a retracement in the downtrend. Fortunately, with Forex Pro Charts, knowing the overall trend is helpful in managing your trade, but does not prohibit us from taking a trade. So knowing the overall long-term direction, and being absolutely sure of which way it's going is not a requirement. Now we can see that this month here, you can see there's just a little bit of a blue painted candle right here. The painted candles are proprietary to Forex Pro Charts and are very useful indicators that combine volume with some other factors, and the red painted candles in particular are useful for trading the zone. But basically, what we see here is that so far for this month, price has pretty much remained stable here, although you see it has spiked down to this support zone here and then moved back up. So basically we're seeing a ranging pattern so far this month, where price is moving up and down between this support zone and resistance zone. But basically for the month, price is remaining pretty much at the same level. Let's go ahead and take a look at the, we also see that price is pretty much midway between the upper and lower edges of our trading field and between the two monthly armpits. So we're not at a point now where we would expect to see price reversing long term. We were at that point here, which is why I say price would have been in an uptrend at that point, and then we're probably seeing a retracement here before price continues back up again. That's what I personally would expect to see, because as you can see from this candle, if you look closely, price spiked down here to about this level, and then price began its move back up. So this is the area in between the monthly armpits and the lower edge of the trading field where we would expect to see price reverse long term, and that's why I say I think we're looking at an uptrend with a slight retracement right here. Let's go ahead and take a look at the weekly time frame. Okay, looking at the weekly time frame, I think we can see exactly what I was talking about here, that price has been ranging in between this support zone and resistance zone, and you can see, sure enough, the week before last moved down. This week it moved straight back up. So we're looking really at a ranging pattern here, which accounts for the way the monthly candle looks at this point. And if our uptrend diagnosis holds true, then we would expect to see price at some point move through these extended trend walls and continue and move on up to a point where it might get stalled a little bit by the monthly trend wall, but we would expect to see it move up to these zones progressively. Of course, there will be retracements and so forth along the way, but that would be the direction that we would expect to see price take over the next week or so. Looking at the zones that we have, you really can't say that we have a rally-based drop, or drop-based rally, pattern at this zone or this zone, because price is just ranging in between. Looking at this zone, you can see that this is just part of a larger downtrend or retracement. The only resistance zone where you see the rally-based drop pattern on the weekly chart is this zone up here at 1.4100. And as you know, that seeing that pattern on the weekly as well as the daily chart is something that we like to see, makes the zone a little bit stronger. Now looking at the support zones, that pattern is not present on this fairly new zone here. When you get down to these two stacked zones, it is present on this bottom zone, not really on the upper zone. Also this bottom zone, we can look at it a little bit more closely, hopefully on the daily chart, but you can see that it has a very small risk right here. Then again, looking at this zone, you don't see the drop base rally pattern on the chart. This is just part of a larger a larger uptrend, and there obviously will be a zone down lower here where we would see that pattern on the weekly chart. So at this point, as far as weekly chart patterns, we think this is a very strong zone, and this one as well. Now that doesn't mean we won't see bounces at the 60-minute armpits, and you can see on all of these zones we've got very nice low risk levels. We have nice 3-to-1 ratios at this. 3-to-1 ratio, 1, 2, 3 is barely 3-to-1. This one is obviously a very nice 3-to-1 ratio, and this one, because the zone is small, also is a nice 3-to-1 ratio. So in terms of long-term retracement, we should see a very nice bounce off of this zone when we get there, but we should still be able to see some bounces off the 60-minute armpits on this zone, and again, with the risk looking fairly low, that should be a nice trade. Let's go ahead and take a look at the daily chart, because we can see that price moved up into this zone at 1.3374, and it looks on this chart like price had reached the 60-minute armpit and pulled back, but we'll want to look at that on the daily chart to see what happened, and then of course we'll examine it in more detail on the hourly chart. Okay, now looking at the daily chart, you can see these patterns in a little bit more detail, and of course on the daily chart we always see the rally base drop pattern or the drop base rally, depending on which way we're going. But looking at this zone here where price was active this week, we see that price did move very strongly this week up from this newly formed support zone and just moved boom, boom, boom straight up back to this zone. Now normally we say that when price is revisiting a zone for the second time, as it is here, that weakens the zone. But we have a couple of things going on here that actually make this bounce off the 60-minute armpit a little bit stronger than the price action when price hit this time. So let's take a look at this zone. First of all, we see at the origination, price moved down and did not quite make a 3-to-1 ratio before price moved back up. This would have made this a more risky trade because we didn't have the 3-to-1 ratio, and you can see that price did not get up to the 60-minute armpit, and it bounced off of this trend wall. Now it did use up some orders and absorb some of the imbalance here, but then price moved very, very nicely, again very strongly without any retracements or pauses, moved very strongly down, formed this zone, turned around and moved very strongly up. And what we saw here on this pattern, when price just bounced off of this this trend wall, we had this red painted candle. Let's see if I can bring that a little bit bigger so that you can see it. We had this red painted candle right here, and the red painted candle you can distinguish from the other red candles because it does not have the black outline around it like your standard red candle does on the charts. This is a red painted candle that is an indicator of high volume as well as some other factors. When we see these red painted candles as price moves out of the zone, that is an excellent odds enhancer for that zone. And you see that we did not have that red painted candle. This one doesn't count because price had already moved out of the zone. We like to see it just as price is moving out of the zone. We didn't have it at the zone origination, but when price then moved back up, we saw that red painted candle coming down. We saw price move well down to achieve a 3-to-1 ratio, and then turned sharply and moved well back up and moved strongly up into the zone. So that would make, as we saw price coming up this way and basically hitting the daily armpit, then we saw that as a good, because of this pattern here, we saw it as a good trade opportunity, even though it's the second revisit to the zone. And combined with the fairly small risk of about 40 pips, we posted a trade alert on this trade, and we're going to take a look at that on the hourly chart. But as you can see here, sure enough, price went straight up to the daily armpit, the 60-minute armpit, and bounced back down very, very nicely. And we probably still have traders who have this trade have this trade open, and all of our traders should have banked some pips at this point. Some of them may have closed out completely, but some may still have a portion of this trade open. So right now we see that price is down below this trend wall. We would basically expect to see price, as we said earlier, we're looking at a long-term price movement up, so we would expect to see price move up eventually beyond this trend wall and move up to this zone, which also has a fairly small risk. Not as strong a zone as the one above it, as we discussed earlier, but we may be able to see also a nice bounce here. Now, if price does move down back to this support zone, if price does reverse here and does not continue up and moves back down, as you can see here, we had a red painted candle on our way out of this zone. We had a red painted candle in, a blue candle in the zone, and a red painted candle out. Boom, boom, price moving up very, very strongly out of this zone. Should price continue back down here and move nicely in, this will be an excellent zone for a bounce off the 60-minute armpit as well. And we've got about a 50 or 60 pip risk right here, which again, when you see these odds enhancers present and the ratio is good, and it's only going to be the first revisit to the zone, that is a reasonable risk to be taking. We also have a 5-minute armpit in this zone. If you don't like the 60 pip risk and you want to make it smaller, you can trade the 5-minute armpit. We do caution you that the 60-minute armpits are the most reliable, that we do sometimes see if price comes down to the 50-minute armpit, it will not bounce as reliably. It will minimize your risk, of course, but will not bounce as reliably as the 60-minute armpit does. So that's just something you need to demo for yourself and kind of get a feel for how that works and which way you prefer to trade. Let's go ahead and take a look at that hourly chart. Okay, so here is our hourly chart, and you can see on the hourly chart, price spent a little bit, not a whole lot of time here, and then once it moved out of this zone, boom, small consolidation, little bitty retracement, and then boom, all the way back up. Where it bounced a little bit off of the daily armpit, well, hardly at all, then boom, moved right up, touched the 60-minute armpit on the nose, and then moved back down to below this daily armpit. And actually we've had a net gain so far, total potential pips of 143 pips so far on this trade. And as I said, a number of traders will still have this trade open. As you know, we recommend that you, on the first portion of your trade, that you capture your 20 pips and either protect those or close them out, that you leave the second and third portions of your trade open, and then that you determine for yourself how you want to handle those remaining portions. We have a number of traders who just set an arbitrary 50 pips or 100 pips limit on that second portion of the trade. They move their stops to break even, and they will, on the second portion of their trade, hope to capture either 50 or 100 according to their personal preference. And then on the third portion of the trade, they'll set that limit based on the chart pattern, and again with their stop set to break even, or they may move their stop up as price would continue downward. For example, on this in this case, if price were to continue down out of the zone and move well below this daily armpit, we'd see a lot of traders go ahead and move their stop to just above this daily armpit, somewhere right in here, thereby guaranteeing themselves a few pips here, waiting to see if price will continue down. But at the very least, traders should have captured the initial 20 pips, and then depending on how they manage their trade and how they handle it, could have captured an additional 50 or 100 pips on the remaining portions of their trade and still have the trade open. And we'll be looking to see how this performs next week. So that is the price action for the Euro USD this week. For more information or to subscribe to our full analysis and charting services, please go to www.forexprocharts.com. You can demo our complete analysis for $1 for a full week, and then make a decision whether you like our services. But that gives you a chance to check out our analysis services. Thanks a lot. We'll see you next week.